Well, good morning. This is July 14th, 2020. I'm in beautiful Phoenix, Arizona. Tatum and I are going to do another Creating Wealth webinar and production for you today. And before we start, there's a couple things that I'd like to be thankful for. I want to thank West USA for providing the platform and to be sponsoring this webinar for you. Now, I've been in the business for 45 years, so this is part of my giving back. So I have been very, very blessed. I've had a very, very wonderful life. I've achieved lots of things that I wanted to do in my life, and West USA wants you to do that too. And I've been in a lot of brokerage firms. They want you to succeed financially. They want you to have a really good business, but they also want you to accumulate assets and reserves and to build a portfolio so that you'll have a wonderful retirement, so that your life will be just that much better. This is very rare in the real estate business. So I want to take this time to just thank them for giving this to you. This is really their gift to you. And I am here to give back as well. So if you have questions, you're welcome to contact me. I office out of the West USA Scottsdale Kierland office. You're welcome to call me there. You're welcome to come in and set an appointment with me, and we can sit down and find out what's best for you. It's free. This is part of my give back to the industry that's been so good to me. I'm trying to be good to you. And West USA wants you to have a great life. They want to put together a retirement program for you. And keep in mind, retirement is not an age, it's a financial decision for you. So if you can retire at 35, by golly, they're just really excited about that. So next time you see one of the executives for West USA or your office manager, you should really say thank you, because this is for you. They're doing this for you. It's one of the few times. I mean, I've been in business for 45 years. I've just never seen a company that really cares about their people, and of course, they're successful. For me, I need a big company. They've done over 1 million transactions and are the 16th largest in the United States. So that qualifies as knowing what they're doing, and I really, really appreciate that. And today we're talking about inflation for creating wealth, and inflation is the destroyer of your wealth. So we want to talk about that today. Now, Tatum is here. She is moderating this. So if you have any questions, you're welcome to go into the right side of the screen and send in a question to it and just type it in. And if we have time, I'm trying to be very, very considerate of your time. Thank you so very, very much for listening to us. And this should run about 25 minutes, hopefully in that time frame, unless we get some questions that are running in. But this is running a little longer because this is an unsolicited plug for West USA. So let's move forward. There's a lot of things I need to talk to you today. So now, when you get to be my age and the programs that we have here, we're talking about planning and savings and a strategy for success. And of course, if you get onto my strategy, if you read my books, you're going to find out it takes about 7 to 9 years to really start feeling the benefits of it. And after 9 years, you have really started to get income. Your life is changing. It's getting so much for the better. You've had reserves, so you're getting success. It's not an accident that you get success. There's planning and strategy that goes into this. But there's a guidepost. That's what I do. This is what I do, and this is what West USA really wants you to do. So the goal is, of course, how much is enough? And you know that I'm a proponent of enough is enough. How much is enough? And of course, only you can decide that. How much is enough to change your life and do what you want to do? And of course, we're not talking just about real estate, because we want your portfolio to have a very good mix. So you're talking about stocks, fixed incomes, pensions, and annuities. So you should be able to, if you're making $100,000, you should be able to get enough income for about 80% of what you're making now, of what your life is running now. When you retire, you're still going to need a lot of income. So let's put this together and see if you have actually accumulated $1 million. So this is what we're talking about. We want to get a goal set for you. Typically, we talk about 10 properties as your base for yourselves, and we're trying to get cash and accumulated assets outside of your home of at least $1 million. And once you get that $1 million, it is all rainbows and unicorns. Life just changes. You can sleep well at night because no matter what happens, your assets and your portfolio protect you and make your life run smooth no matter what happens. My clients and on a strategy with our properties and our portfolio have received income throughout this entire recession, and they can sleep well at night because all their bills are paid. Income keeps coming in, and it's fun, fun, fun. Now, of course, most people, when they talk about a portfolio, it's a diversified portfolio of stocks and bonds. This is where most people have. So when you start thinking of 40% or 50% stocks, 50% bonds, that's a very, very conservative mix in most of your financial planners' eyes, particularly if they're in the stockbroker. They're going to think this is exactly where you want to go. A lot of people are going to diversify and go into an annuity. And let's just talk about corporate bonds. Now, you're going to need income when you retire. This is just something that you just absolutely positively have to have. And income today is a really scarce commodity. So if you get down into the investment grade bonds, this is what an investment grade bond is yielding today in July 2020, 2.27%. So if we split that $1 million, 45% stocks, 45% bonds, and a 10% annuity, that would be considered a very, very conservative mix. But you don't get very much money on that. So you'd only be looking at about $12,150 with your bonds. So with $12,150, you can't live too long on that. So let's just move on to the next one. If you're going to do that, then you're probably going to look at your stocks. If we had $450,000 in stock portfolio, you're going to be getting another $8,600 in income. So 12 and 8, you're talking about $20,000 a year in income with $900,000 of capital. Not very much money. And if you put your money into the stocks, you have, in the last 3 or 4 months, we have really seen the volatility and the risk and the sleepless nights that come with having money in a stock market. And I'm going to tell you, when interest rates are this low, your bonds are at risk as well. So most times when you're looking at your portfolio, it's stocks and bonds. Both of those are at risk, and both of those yield you nothing. Now, if you go into bonds, you do have, into stocks, you are going to get a little growth. And of course, if you're in the right stocks, like if you've been in Tesla for the last 2 or 3 weeks, you've done really, really well. However, this morning, Tesla's dropping, so the risk is pretty enormous, and it's a lot of your portfolio. So you just have to be kind of careful with that. And of course, if you go into an annuity is going to give you a cash flow, but it's fixed. It's never going to go away. And of course, sometimes with annuities, you have to really, really pay attention. So between those three of you, we forgot one other thing. You get Social Security. And of course, if you put $1 million together, it means that you've probably paid a lot of money in Social Security. And oftentimes it's husband and wife are both working. And I'm going to say, let's just for purpose of an example, assume that both of you get $1,500 a month. That's $36,000 a year. So Social Security is going to provide you $36,000 a year. They also have a cost of living increase. So whatever you receive at $36,000, whatever kind of money that your cash will buy, your cost of living is going to stay the same based on $36,000. But you're not earning enough money. So most financial planners are going to talk about the Bengen Rule. So if we go into the Bengen Rule, which is 4%, so we have $1 million, we're going to get $40,000. Now, you're receiving $40,000, but your basket of investments are only giving you 20. You can see that you're depleting your capital. You're depleting your capital gains. And his Bengen Rule, as we've talked before, is only good for 30 years, which is probably fine for most people. But if you retire early at 62, you could easily live into your 90s. And as medicine goes further and we get better and we get more healthy, we're going to start living into the hundreds. Now, if you follow the Bengen Rule, at 92, you're going to run out of money. And who wants to be out of money at 92 years old and not have any money? So that Bengen Rule is great if you die before 30 years. I mean, that's just wonderful. You have to time your death, and then you just be fine. But if you don't time your death, if your spouse outlives you, your spouse needs to have capital and has to have income with which to survive, and probably survive for a lot longer than what you really think. So if we combine all these, if we take a Bengen Rule of $40,000 off your $1 million, that's 4% off $1 million, and $36,000 a year from Social Security, you've got $76,000 a year coming in doing nothing. It's passive income for yourself. That's $6,300 a month. That is easy street. So $76,000 a year is going to allow you to go on a couple of cruises. You're going to be able to see the grandkids, take the grandkids to Disneyland. You're going to take your baby to Great Wall of China to learn how to paint in France. All kinds of really, really good things are going to happen to you, and life will be so much better. You might just party, party, party. You could party until you're 80 years old, 90 years old. We just don't know how long you're going, but life expectancies is getting a lot more. So you could have 30 years of bubbly of having fun. But we forget something. 30 years ago, $20 bought you a whole lot more groceries than it does now. And even just 15 years ago, just thinking what $20 bought in groceries was a whole lot less than it was in 1988. And in 2013, which is just 7 or 8 years ago, it's even less, and it's going to keep getting worse and worse. That is called inflation. Now, I got this chart yesterday, and I just want to illustrate a couple of things. If you look here, this is Dr. Copper. We've seen that copper bottomed. If you recall our presentation we had in March, we talked about the fact that this is going to be a vicious, deep, nasty recession, but maybe just a short recession. Now, it may not feel like it's getting better, but I'm going to tell you, Dr. Copper bottomed in March, and now it's over what you see when it first started. So Dr. Copper is going up, and that's showing that industrial production around the world is getting better. Now, that's a long ways from saying it's recovered, but it looks like it's getting better. And what also that shows is that prices are coming up because the base materials have made a huge move. They came down here to $2 and now they're almost $3. That's a 45% increase in like 3 months. That is called inflation. And when you get your base metals, they are pervasive throughout the economy. So you can start looking that prices are probably going to go up. And at $76,000 that you got, that inflation will burn your portfolio in 10 years. Inflation will destroy a fixed income portfolio. Those bonds and those annuities that sounded so great after 10 years aren't so good anymore. And what's going to happen if you're in it for 30 years? What happens if you die and your spouse lives on? What happens if you're 95 years old and you run out of money and the little money that you have doesn't buy anything because the cost of living has accelerated so fast? And I'm going to tell you, with all the debt that's in the world, one of the great ways to remove that debt is to inflate it away. And you can see that that is already starting. Now, I'm not expecting this to get into hyperinflation, but let's just look at this. Look what happens to your purchasing power in just 5 years at 2%, just 2%. In 5 years, that $76,000 is only purchasing less than $69,000 in purchase price. After 10 years, you're going to really start feeling it. After 10 years, that purchasing price at $76,000 has been reduced to $62,000. And after 20 years, and I'm going to tell you, you're probably going to have at least 20 years in retirement, 20 years, probably 30 years in retirement. Your purchasing power is already down to a third, just at 2%. And I'm going to tell you right now that the Federal Reserve and the Treasury and all the Federal Reserves around the country, around the world, the central banks, they want to ignite inflation. And it's the worst thing that can happen when you have fixed income is inflation in the world. At 4%, it's really bad. So just 4%, and 4% really is not that much. I've seen inflation at 13, 14, 15%. Sometimes, I mean, just look what's happening here in Phoenix, Arizona, and around the country in the great markets. You're seeing rent inflate. Think of here in Arizona, the houses have inflated almost 10% so far this year. So a $300,000 house bought in January is now $330,000 at the end of June in just 6 months. That is inflation. And if it really gets going, I'm going to tell you your purchasing power is going to drop like a rock. And that is why 75 years and older are back to work, because after 10 years of inflation, their purchasing power just doesn't go anywhere. They can't buy as much groceries. Their utility bill is higher. Their gasoline is higher. The cost of services, have someone come over and fix your plumbing. It's more and more and more. And after 10 years, if you retired at 65, 72% of 75 years and older, 75 years and older are back to work. They're the biggest segment in America. 75 years and older, 72% of them are back to work because inflation has destroyed their portfolio. So I hear the story that, yes, they just want to do this. They're here because they want to have things to do. That is just not the case. They want to pay their electric bill, and they need to go back to work. So be kind to these people. This might be you. So let's do something about that. So taking a fixed income is probably not a good idea. What we want to do is get something in. It's an inflation hedge. And what inflation hedges do we have? Well, precious metals are really good, but they don't throw off an income. And of course, let's just think of my favorite asset class, residential real estate in the great markets of the United States. We're talking about Florida, Texas, and of course, Arizona, where every other car here you see is from California because they're just driving into Arizona and they're going to turn Maricopa County into the new Orange County. Well, I'm going to tell you that rental prices track inflation. Rental income tracks inflation. So as inflation goes up, you can be sure that your rentals are going to go up as well in value, and the rents are going to go up. So your purchasing power stays intact. So that $76,000 that puts you on Easy Street keeps you on Easy Street all your life. It's an inflation hedge that pays an income to you, and you can always have it. So as the inflation goes up, your rent goes up. Now, we have a target of 10 rentals. 10 rentals, I'm going to tell you, 10 free and clear rentals, because keep in mind, if we put mortgages on them, they do pay off. And your tenant pays them off for you. After 10 properties, you're on Easy Street for the rest of your life. And if you start at 35 or 40 years old, this is going to last you till you're 100. And you should have rental properties in your portfolio, even if you're retired. If you're 55, 60, 65, 70 years old, you have to have an inflation-proof portfolio. You have to have these properties into your portfolio, or inflation will wring you out. And keep in mind that when we're looking at rental properties, we're going to get double or triple the passive income that you get, that you're yielding in a stock and bond portfolio. So not only does this give inflation, but it gives you a livable yield in a very, very difficult world to find yield. You get yield out of residential rentals. And if you're in one of the great markets, those are really accelerating. So not only do you get inflation, but you're getting growth. So you get both of these. So you're getting double or triple for sure than what you're going to get in a bond and stock portfolio. So get ready. Really get ready. Only once every 18 and a half years, you have an opportunity coming to you, and it is coming to you soon, right behind this recession. And as you see, the copper is showing you that the economy wants to open up, the economy wants to get going, the world wants to get back to work. Right behind that is the explosive phase in the real estate business, and it only comes to you once every 18 and a half years. You need to talk to your brokers. You need to talk to your real estate agents. And if you're an agent, you need to get ready. Talk to your mortgage brokers. Get ready to buy, because it's coming. Fortunes are going to be made. And if you have not been able to put your retirement portfolio together, if you've not been able to do all the things that you want to, here is an opportunity that is looking you right in the face. If you miss this, you may not get it again. If you're my age, it doesn't come back for us. Next time, I'm probably not going to be around for the next time it comes back. But you need to make this work for you. Now, we're in a recession. The last recessions, the mistake I made, I did not buy enough. So this is coming. Talk to us. You're welcome to call me in my Kierland office for West USA. More than happy to sit down with you. We can make plans. We can do whatever it is that works for your portfolio. This is for you. So talk to your financial advisor. If you need to get an inflation hedge into your portfolio that cash flows, and cash flowing conservative rentals is probably what is best for you. I'm here to help you. If you want to call me, if you want to email me, you certainly can. It doesn't cost you anything. You've got a free consultation. This is part of the support that I get from West USA. They sponsor me, and it's my giving back to you. So if you want your portfolio reviewed, it's confidential. Just email me. If you're looking for conservative cash flowing rentals in Maricopa County, just email me. We do 1031 exchange replacements. We'll do property reviews. We do calculations. If you're looking at a property and you're not sure how that is going to pencil out, give us a call. We're more than happy to sit down with you and go over your calculations and do everything we can to see if it's a good investment for you or not. And you're always welcome to call me at my real estate office in Kierland at West USA. So I want to thank you very, very much. Thank you for being listening to us today. If there's anything I can do for you, be sure you email. My very, very best to you. Bye-bye now.